Oh, what's up, everyone? Muted? Yes. What's up? Hope you guys are doing well. Didn't realize my mic was muted, but we should be good here now. Yeah, what's up? What's up? Today is June the 11th. It's a Thursday today. Overall markets, as I mentioned, we ended up closing underneath on the daily time frame. Right now, we're currently bouncing back in between its previous day's range. So there's a couple things to talk about here. But yeah, what's up, everyone? Good morning. Hope you guys are doing well. Good morning, Kelvin. Good morning, P1, Victor, B Roots. Good morning, Knight. Good morning, Maria, J Tan. What's up, Vate, Israel? What's up, Kevin, Joshin? Good morning, Gerald, Robert, Randall. Good morning, Cinna, Juan, Stefan, Lamit, Cosmic, Z Norris. Yeah, what's up, everyone? Hope you guys are doing well. Let me pull up the economic calendar here. Let me pull up the Forex Factory. As you can see, coming into today, there's a couple things to keep an eye out for. We do have core PPI month over month. That's going to be at 8:30 a.m. Eastern Standard Time. And then we also have the unemployment claims as well. So we'll do the same kind of game plan that we had yesterday. We'll go onto the charts and then we'll kind of develop our game plan within 20 minutes. So yesterday we had core CPI. Initial bullish reaction followed up by kind of a pop and fade later into the session. And then we end up dropping all the way back down into that last week's lows. So we'll kind of talk about that here on the charts. We do have a couple more things kind of currently going on, some more uncertainty in the markets as well. Back with, of course, the Iran news, which is kind of helping the markets overall drop. Similar to now, or sorry, what's something to keep an eye out for is now the overall markets. As you can see, we have a couple more bearish news catalysts that are actually dropping the market. So after we had that original war news that dropped the market, once we started finding a bottom, every single bearish news event, we just end up continuing higher. And now you can see we're starting to find some consolidation here on the higher time frames. Now we have a couple more bearish news events, and you can see the market's actually having a reaction off of that. So currently, as you can see, most pops are being shorted if we're looking at this on the hourly time frame here as well. Every single pop that we've had since last week, where we ended up started gravitating towards the downside, is now being shorted. Now for the QQQ, we have a couple key levels, which happens to be that 700 and that 688. You can see some buyers are stepping in, but most pops are currently being shorted here. Let's go on to the daily chart on the QQQ. What are the key levels that I have marked out? So as you can see, the key levels that I have marked out on the Qs is number one, this daily gap fill that we created. Plus, we also have our 700 key psychological level here as well, which happens to be this daily double bottom. So for the Qs on Wednesday, we end up having a nice drop towards the downside. Buyers end up closing back above inside the range. Yesterday, we end up closing underneath this 700 key psych level. You can see the EMAs are starting to kind of flip here as well. The 9 is potentially trying to cross over this 21. So as I mentioned, we're in a very key inflection point for the QQQ. What I'd like to see now is we can clearly see the momentum has clearly slowed down here on the daily time frame. So we're just going to be a little bit more patient. We're going to wait for some more consolidation here in the markets. I'm still going to have this general area marked out, which is this 700 key psych. If markets do want to bounce now, most likely it is going to take a little bit longer, right? Buyers can step in for potential pushback up in towards that 720. If we kind of bounce up into this 720, we come back down, right? Maintain above really this like 700 and the 690. Potentially you can see a move maybe within a couple of weeks back towards the upside. What I would be a lot more cautious of is if the daily, or sorry, if the weekly time frame breaks underneath this kind of 9 EMA that we have, right? If the weekly candle closes underneath this 700, then I'm going to be a lot more neutral here in the markets. Right now, currently on the daily time frame, we're consolidating. If the weekly closes bearish, right now we're right at this higher low here on the weekly time frame that we'd like to be set, then I'll expect a lot more potential consolidation or even a pullback down in towards this like 640. So this is kind of that higher low here on the weekly time frame. that we'd like to be set for continuation higher. If we break underneath, as I mentioned, next level all the way back down in towards that 640 here on the higher time frame. So keep an eye on this 700 on the weekly time frame that buyers are trying to step in above. If we're on the daily chart, we already went over this one. Let's go on to the lower time frames here. The 15-minute coming into market open, the key levels that we have marked out is our low that we created here on Wednesday. Now other levels that we can have marked out here as well, which is going to be that Friday's lows of last week. So if we do want to see any sort of potential continuation higher, you can see multiple kind of rejections right off this key area. What we like to see is the break above hold for this push up in towards our previous day highs. Right now, we're currently right in between this middle of the range, very similar to yesterday's open. Right, yesterday we opened up right in between the middle of the range. Today we're about to open up right in between the middle of the range here as well. So we're going to be a little bit more cautious on the Qs once again. If we can maintain above that 700, we can see a push up in towards that previous day highs. If we get underneath the 700, hold underneath, then we can see a push back down in towards that 688, which is our previous day lows and below. So let's keep an eye out on our 700 key site coming to today. If we go on to the NQ chart, very similar levels, the key levels that we have marked out is going to be that previous day lows. Let's actually just move this. And then the other levels that we have marked out here as well, which is basically going to be the Friday's lows that we have marked out. So key levels on the NQ is our 28,900. If we do want to see a potential push back towards the upside, the flip back above for a push up in towards that previous day highs. If we get underneath that 28,900, we can see push down in towards that previous day lows, along with our Wednesday's lows here as well. So this is what we have for the NQ and the QQQ on the SPY chart. Let's quickly go into this on the daily time frame here as well. Right now, we are right at this daily gap. And so far, buyers are stepping in off this area. You can see on Wednesday, buyers stepped in. Yesterday, price came all the way back down towards that 725 once again. And I can see we're getting a little bit of reaction right off this 730. The weekly time frame, I'd like to see close above this 730. It doesn't have to necessarily close above for it to be bullish on the weekly time frame, because for a daily higher low to be set on the SPY, it could bounce off this 730, continue towards the upside. It could come a little bit deeper into like even like 720, may have an overshoot and push back towards the upside, or on the weekly it could come all the way back down in towards that 700 and still be very bullish for continuation back towards the upside. If we're looking at this on the daily, the key levels that I have marked out is our 730 along with this daily gap. So for the SPY, these are the areas that I'd like to see the overall markets bounce. As you can see, the EMAs are starting to cross here as well. So the momentum is definitely shifting slightly now towards the downside. What I'd like to see here on the SPY, the key levels that I personally have marked out is our previous day lows along with this 732. If you want to see some upside, the reclaim back above our 730 for potential previous day highs push is in play, or now more so this pop and fade. Right now, currently, I'm leaning slightly bearish just because every single pop has been shorted here in the markets. We're just going to continue to ride the trend towards the downside. So the pop and fade offers 732 for room down in towards our previous day close, along with our 724 here on the higher time frames. As for the ES, the key levels that we have marked out, we can mark out that Wednesday's lows, and then other levels that we can have marked out here is going to be our really this low that we created here in the overnight session on Sunday. And then as you can see, we have multiple touches yesterday here as well, right? Touch here, right? Nice pop coming to market open. Once we got back underneath, ended up fading towards the downside. Now you can see the touch in the pre-market. So key level here, 73.40s, potential flip back up in towards our previous day highs is in play. Or if we reject, which is a more likely scenario, push down in towards our previous day close, along with our Wednesday's lows down in towards that 72.60 on the higher time frames. Let's Let's go on to the SMH. SMH here on the daily. I'd say the semis are still fairly bullish here. If we're looking at this on the weekly time frame, we do have one down close candle. Our key level is just going to be this 780 here. We like to see it maintain for continuation back towards the upside. If we're looking at this on the daily time frame here as well, key levels on the daily is going to be this 780. So really nice solid push towards the upside on the semiconductors. Right now we're coming into a key level of support, which so far I would say we have a little bit more consolidation after this drop last Friday, but we're still holding a structure on the daily time frame, building up these higher lows. So 570 is going to be my key area for a potential continued pushback towards the upside. If we're looking at this on the hourly time frame for the semis, we're going to just mark out this whole general area. If we want to refine it even more, we can kind of mark it down into that previous day lows. And we can also have that 580 level marked out here as well. But for the SMH, the key levels that we have marked out is going to be that previous day lows. And then other levels that we can have marked out is our 605. And now we can mark out that previous day highs, which is our 596. So coming to market open, very similar on most of these tickers. It's just going to be that previous day's range. Currently, we are opening up right in between the middle of the range. So for the SMH, right in between the middle of the range, we're going to wait for that opening range candle. If you want to see some upside, need it above our previous day highs for a potential push up in towards our Wednesday's highs and above. If we ultimately reject off this 595, then we can see room down in towards that 570 here on the higher time frames. All right, with that being said, let's go quickly onto the IWM and then we'll head on to some tech names here now. As for the IWM, as you can see, higher lows are being built on the daily time frame. We'd like to see now the IWM, the reclaim back above that 288 for a pushback up in towards that all-time highs. Currently, as you can see, higher lows are being built, but we need it back above that 288. All right, with that being said, I'm going to go on to some tech names here now. So if you guys do have any charts or any tickers you'd like me to go over, you guys can drop them in the chat. If you guys are enjoying this so far, appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below as well. All right, let's talk about Tesla. So Tesla, first chart we're going to be looking over. We do have this SpaceX IPO coming up here as well, which is going to be tomorrow. We'll see how that impacts the overall markets, but that's going to be fairly important. The key levels, as I mentioned, that we do have, at least for Tesla now on the daily chart, there's really not too much to talk about. We'll see how it shapes up tomorrow, but this one is a little bit weaker. As you can see, now we're kind of rejecting right off the area that we broke down from. And what we like to see here now in Tesla is the break back underneath that 390, which we ended up getting back underneath. So some of the levels that I have for Tesla here on the lower time frames coming into today, at least, where we're going to have marked out is going to be that 395, which is our previous day highs. Nice pop and fade off that level yesterday for a push towards the downside. Other levels that we have marked out here now as well is our 385 on Tesla. Underneath 385 on Tesla, showing a little bit more weakness down in towards that previous day lows and below. If we want to see a potential flip back above that 385, we have room back up in towards that 390. So for Tesla, this one seems a little bit weaker. The Q seems like we're kind of rejecting a little bit so far right off the key level. So keep an eye out on Tesla today for a short underneath that 385, potential room back down in towards that previous day lows here and below. As for Nvidia, this one really not too much to talk about. We're actually coming all the way back down into that 196. This one's a lot weaker compared to the major indices. The levels that we have marked out is at 210. So as you can see, EMA's flipping, breaking underneath a key level support. Markets start showing a lot more weakness here. Now for Nvidia, what we like to see is really this 195. This is the area that we bounced from a couple times. For Nvidia, we like to see the bounce off our 200 for a pushback towards the upside. If we're on the hourly time frame, key levels that we have marked out is our Friday's lows, and then we can also now mark out that previous day lows here as well. So for Nvidia, if we want to maintain weakness underneath this 205, continuation towards the downside. Underneath our previous day lows, we have room towards the downside here as well. For upside on Nvidia, I would only be interested on the daily time frame, the bounce off our 196 for continuation, or we'd have to reclaim back above our 210 for a pushback towards the highs here as well. As for AMD, this one is slowly starting to show a little bit more weakness. You can see a lot of these tickers are now closing underneath the 21. This is the first sign of not weakness. We had a first sign of weakness on Friday, but for something like AMD showing a little bit more weakness here now as well. You can see on Wednesday, pretty big range day. Yesterday, closing underneath a couple of the EMAs here as well. Key level that I have marked out 460. That's a level I like to see hold. No buyers are really stepping in right off this 460. So you'd have to see the reclaim at a minimum if we want to see any sort of push towards the upside. Of course, the overall indices are dropping. So that's why a lot of these tech names and everything else is showing a little bit more weakness as well. So you can see the Qs closed underneath that 21, SPY underneath the 21 with a strong candle close. So a lot of these tech names are going to start dropping, of course, with the overall indices dropping as well. As for the key levels that we have marked out, right now I just have that 470. Above our 470, we can see continuation. Underneath that 470, we can see a push towards the downside. If we're on the lower time frames, yesterday we end up having a nice pop coming to market open. Buyers tried stepping in, but ultimately got underneath, and you can see a little bit more weakness down in towards that Wednesday's lows. Right now, we are at a key level, pop and fade underneath that 465, continuation down in towards that 440. If we get above our previous day highs, potentially we can see it, above that 470, we have room up in towards that previous day highs. As for Apple, Apple is actually one of my favorite looking charts here on the higher time frames. This is the break and retest off our previous all-time highs. What I like to see here for Apple is now buyers step in off this 288 for a pushback towards the upside. Keep an eye out on our hourly time frame here on Apple. What we have marked out is going to be our previous day highs. So let's mark out this general area. As for Apple, 294 is key. If we can break above our previous day highs today, hold above our previous day highs, we can see a potential reversal here on Apple above our 294. If we reject off that 294, then we have room back down in towards that pre-market lows and potentially below here, which is at 290. But keep an eye out on Apple above our 294. As for Google, this one, key levels that we have marked out is going to be that weekly time frame break and retest as well. Keep an eye out on Google above our 350. So far, this one is pulling back into a key technical level. So let's see if any buyers can step in for a potential reversal back towards the upside on Google. Microsoft dropping, Meta dropping, Amazon dropping. Almost all these Meg 7 names are dropping towards the downside. The only thing that's really holding up the markets are a lot of these semiconductors, right? You can see the SMH is still a little bit more bullish than the overall indices as well. If the SMH starts dropping, then of course the Qs and SPY are going to have a bigger drop in the market. So you can see the SMH is still holding up compared to the Qs and SPY, which are trying to break underneath key levels. And of course, AMD, a lot of the other semiconductors, right? MU still holding up, right? SNDK, Intel. If these names start dropping, then the overall broader market's going to have a lot bigger of a drop towards the downside. So let's go into a couple tech names here now. As for AVGO, this one breaking underneath our key levels 400. This one's starting to show a little bit more weakness. What we have marked out on AVGO is just our key levels, which happens to be our 385. You can see almost nice pop fade off that earnings low. Yesterday, another pop and fade towards the downside as well. For AVGO, the key levels that we have marked out is our previous day lows. So if you want to see continuation on AVGO, underneath our previous day lows, push down in towards that 365 here and below. If we bounce, then potentially we can see a mini bounce in towards that pre-market highs here on AVGO. As for a couple other names, right, MU, a lot of these ones are starting to slow down just a little bit. I'd say we're consolidating more than anything in the past week. We're just going to be a little bit more patient for MU. The best scenario would be the retest of this 800. So if you kind of consolidate a little bit more, come back down in towards that 800, and then look for a bounce play back towards the upside on this one. At least for intraday, we're going to be a little bit more patient. The levels that we're going to have marked out is going to be our previous day lows, and then we can mark out our previous day highs, essentially the area that we broke down from here on MU, which is that 960. If we're looking at SNDK, this one consolidating, similar thing, basically in between kind of this Friday's range. Intel is one of the ones that are showing a little bit of strength. I talked about Intel last week, more so right at this 100 key site. Buyers are stepping in nicely. But of course, the overall broader market is dropping. So for Intel, we like to see it kind of consolidate a little bit more, break back above that that 112 for continuation towards the upside. As you can see, this is a very clear level. Intel rejected here multiple times. Intel needs to see it above that 112 if you want to see any sort of continuation higher. If we reject, we're going to come right back towards the downside here, 106. So keep an eye out on the break above this 112 here. We can also keep an eye on that previous day highs, potential previous day highs hold for a pushback towards the upside. Right now, it's a lot harder to trade, of course, continuation with of course, the overall markets dropping and a little bit more uncertainty in the markets as well. So we're just going to be a little bit more patient. We're going to be open to playing both sides of the markets, and we're just going to take it right day by day. If you're day trading, right, you're not going to have a bias regardless. But if you're swing trading or long term, it's gonna present a lot of nicer opportunities coming up here fairly shortly, right? For the dips, if you're interested in long terms, whenever the VIX spikes, right? If the VIX can spike up into towards like 25 or potentially even 30, that's going to be a good area, at least in terms of long term. Right now, we're pulling back roughly about 8% here. There is a lot more room towards the downside, right? 8% is not too big of a drop relative to the move that we had from April all the way up into the start of the month. But as you can see for the Qs, any sort of drop underneath that 680, right? You can start looking for some long terms all the way down into this like 640 here on the higher time frames. Obviously, the best case scenario would be the retest of our previous all-time highs, but this is very far away and not as likely on the SPY and Qs in itself. So we're going to keep an eye out on a couple key levels that we have marked out, and then we're just going to take it day by day, as I mentioned, at least for the day trading. As for the long terms, we're just going to maintain. The only thing that's changed a little bit is the swing trading, which is, right, at least for the upside, we're going to be a little bit more hands off on the swing trade until we can see either a couple bullish news catalysts or some higher time frames to set back up here as well. But yeah, with that being said, we did recently just have our core PPI numbers come out as well. So we'll take a look at that. If you guys do have any charts or any tickers, as I mentioned, you guys can now drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. All right. So as you can see, we just had our core PPI numbers released. Actual 0.4%, forecasted 0.5. The PPI month over month came in a little bit higher than expectation, 0.7 compared to 1.1%. And then for the unemployment claims, a little bit higher than expected, not by a lot, 229 compared to 220. As for the overall markets here now, so coming to today, What we're going to keep an eye out on is this 700 that I talked about. Game plan today, looking for a pop and fade back towards the downside here on the major indices. That's going to be the number one scenario for downside. Upside is going to be, as you can see, upside's been very difficult this week. There's been a couple scenarios, like a couple bounce plays on Monday. Yesterday, or sorry, on Wednesday, you had a nice bounce play after a big drop. And then right now, you're seeing a little bit of a bounce in the overnight session. But really, there's been no scenarios where there's been good the shorts have played out a lot better in the markets compared to longs. So for the Qs, we're just going to continue to trade with the trend. After the drop on Friday, we've been more bearish, so we're just going to continue to look for some downside underneath 700, push down in towards that 688. SPY, similar thesis, underneath our 732, push down in towards that previous day lows here and below. As for some of the main watches here today, we're just going to keep an eye out on the indices. Tesla, I'm going to keep an eye out on shorts underneath that 385. Tesla presented a nice shorting opportunity yesterday and even on Wednesday as well. So another pop and fade is in play here as well. As for everything else, right, Nvidia is going to come back down. AMD is going to come back down. So right now we're in a scenario where a lot of the names are just going to follow along with what the Qs and SPY wants to do. So if you can basically get the direction right on the SPY and Qs, you're going to get the direction right on a lot of these tech names. So the pop and fade is the game plan coming to market open. As for the rest of the tickers, you can see they're all going to drop with, of course, the Qs as well. The only ticker that's like somewhat bullish and that had relative strength yesterday was Hood, and you had a couple other tickers as well, but really Hood was the only green ticker on the day. And we had a couple other names. Marvel starting to show a little bit more weakness here as well. Marvel is right back into that 9 EMA. We are trying to defend this daily gap, but we like to see a little bit more consolidation here now. We'd like to see a little bit of a tighter range be built up before we see any sort of continuation higher, right? Marvel, of course, now isn't, it's still bullish, but of course, with the market dropping, we're going to be a little bit more patient. How much is the market? Downsides about dry powder for space. That's a huge factor as well, plus more uncertainty. We had AVGO earnings last week, which dropped the overall markets. And of course, the SpaceX IPO is going to come in. They were trying to target a $2 trillion valuation. So that's going to be a huge impact for the markets. One of the biggest IPOs in stock market history. So definitely funds are, of course, going to have to buy that up. It's probably most likely going to be in a lot of the major indices and the funds as well. So that's going to be something that's really big, right? I'm expecting quite a bit of volatility on day number one. Within the first 6 months to a year, most likely it is going to drop. But then we'll see how it kind of affects the broader markets. But stuff like that, already, right? The markets are kind of selling off into it. So we'll see how the reaction is set. Of course, that is going to be tomorrow. Let's go on to a few other tickers here. ARM, a lot of these ones, right, are kind of breaking underneath key levels. We were building up higher lows. So a lot of the bases earlier, as you can see, we're building up higher lows for the next leg higher. I'd still say we're right at a key level. We're having a bigger retracement on a lot of these semiconductors. So they're just going to take a lot longer to set up on the major indices, right? With the SPY, of course, pulling back, that's your sign that swings are going to be a lot more difficult. When the VIX spikes above 20, that's a sign that it's really good for day trading, for day trades that are upside, downside, just quick moves in the markets. But like swing trading and long terms are definitely going to take a hit here with the VIX spiking. So whenever the VIX spikes, you just want to be in trades that are more short term, not more shorter term, because any trades that you hold, right, can flip quite a bit. So let's say you take a long position, you're up nicely within the first like 30 minutes to an hour. You don't want to hold for a very long time because the markets can flip and we can have a continuation lower, right? Similar thing, if you're in a short position and you're trying to hold for continuation, you can see by the time market opens, we're already kind of back at this entry point. We are dropping here now, but you don't really want to be holding any overnight positions unless you have a really solid entry or you have a very small select position size, right? All that should be primarily day trades, and you should just be looking for key targets, selling majority of your position, and then maybe leaving very small select trailers, because now we're going to have a lot more news in the market. with of course Trump and the Iran news. So that's going to now be affecting the market once again. So we just want to be a little bit more patient. We're going to be looking for some more day trades and shorter term trades in the markets, and just waiting for the reaction that we have off key levels. But yeah, at least for today, as I mentioned, the game plan is looking for a pop and fade here in the markets towards the downside. At least for everything else, yeah, we're just gonna look for the same thing, right? Pop and fade on most tickers here, along with the SPY and Qs. We are kind of opening up closer in between its previous day's range, so I'm gonna be a little bit more patient. Similar to yesterday, if we have a clear direction, then we can be looking for some sort of intraday relative strength or weakness. Besides that, we're going to be a little bit more patient with us opening up in between its previous day's range. And then for the rest of the tech names, we're just going to be waiting for the reaction off the key levels that we have here as well. So at least for upside, um, Intel is like my one of the stronger names, so we'll keep an eye out on Intel for continuation and potentially Hood. But besides that, the rest of the names we're going to be a little bit more patient on and wait for the reaction on the major indices themselves. But yeah, that's going to be it for me today. I'm going to get ready for market open here now. Tomorrow is going to be a pretty big day with, of course, the SpaceX IPO. So that's something to keep an eye out for. We'll talk about that a little bit more tomorrow. And yeah, with that being said, I'm going to get ready for market open here today. If you guys did enjoy that, appreciate if you guys drop a like and sub. If you guys haven't joined the free daily watch list, that of course is in the description below. And if you guys haven't signed up for the ebook already, that of course is in the description below as well. But yeah, that's going to be it for me today, and I'll see you guys all tomorrow. All right, take care, everyone. Peace.